please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Good afternoon. Welcome to Halftime Report. It's 12 noon. We're halfway through the trading session. It's a perfect time to take you through all the top stories of the day. I am Reema Tendulkar. With me is Nigel D'Souza. And the headlines are TCS. Is it going to hit that $100 billion market cap, making it the first Indian company to do so? It's also about the rupee and the moves that we are seeing there. So lots to talk about in the next 1 hour. Before that, some statements from the DOT, or Department of Telecom official, about the new telecom policy, which proposes to ease the rules on spectrum, on sharing, trading. We'll try and get you more details on that. But remember, the telco's position is quite stressed. They don't have the bandwidth financially to go ahead and acquire more spectrum. 5G has been spoken about globally, but we don't know when that's going to happen in India, and whether banks will even give credit to the companies to go ahead and buy the spectrum. So we'll see.
Well, Reema, getting back to the point about TCS that you were making, I remember the day Infosys came out with a set of numbers, the markets were strong and Infosys was the only drag. Yeah. Today, thank God for TCS. If it wasn't for TCS and the other stocks, in fact, the Nifty would have been down, what, around 60 to around 70 points. If you just put that together, Infosys, TCS and a couple of other IT names as well, contribution chart should come up for you. We're down 30 points, but we could have been down far more. And Reema has been giving us a lot of headlines all through the day. This is the first time that TCS's performance has beat Infosys in the last many quarters, right, Reema, in terms of revenue growth as well as profitability. You had put out some statistics out there in terms of the growth, I think.
Actually, that's since 2006.
Okay.
So that's the time when TCS listed.
You're right.
So in that period, so we were just trying to compare Infosys and TCS and the kind of returns that TCS shareholders have given vis-a-vis the Infosys shareholders. So since they've returned, the growth of TCS, revenues and profits have been more than that of Infosys.
Okay, all right. Well, on to some macros now. The rupee is at a 13-month low. The bond yields as well, they have fallen sharply on hawkish MPC commentary. Lata is with us in the studio to run us through both those two details. Lata.
Well, first up, the rupee. This is a bit of a global trend as well. Globally, the dollar is now inching towards 90. It's actually almost there, 89, 90 plus. And that obviously meant all emerging market currencies are feeling a bit of the pressure. Those with high current account deficit feel the pressure even more. And in India, we had a bad trade deficit number for March, and that's only the fears are only getting compounded because all through April, crude has gone from strength to strength, which means the trade deficit is worse. You would want a higher capital flows to bridge the gap, and that's exactly when the FPIs are selling both bonds and equities. So how do you make the difference of a higher trade outflow and capital flows not coming in to bridge the gap? Obviously, the price of the dollar gets more expensive, and now the 13-month low of 66.08 was touched, at which point dealers said they noticed a lot of state-owned banks, PSU banks, selling dollars, and that usually is interpreted as on behalf of the Reserve Bank. But exporters also sold at that level. And therefore, we might see this pivot 66 being some kind of a support zone for the rupee. RBI is sitting with enough reserves, and therefore it will not allow panic reactions. It will allow only a slow deceleration or a fall, depreciation of the rupee. The bond markets has only bad news coming for it. The latest, of course, was the minutes of the Monetary Policy Committee. Until now, the impression was that only one member is hawkish, and in the monetary policy itself, the inflation target forecast of the RBI for the second half of the current year was lowered by 10 basis points, which the markets took as a dovish sign. But that's not what was crossing the MPC members' mind. They were feeling very hawkish, although the inflation number had been lowered. The comments indicated that while one RBI member is already voting for a hike, another one is likely to go there very soon. Viral Acharya saying that he is about to move from a neutral stance to a withdrawal of accommodation stance, which is just a legal way of saying I want to hike rates. The other members, Chetan Ghate also sounded a bit, he's an external member, also sounded a bit hawkish. But then there have been other things as well. You know, crude is still rising. That is inflationary. Every time rupee becomes cheaper or dollar becomes expensive, imports are going to become expensive. That's also an inflationary trend. And in any case, there are hardly any buyers for bonds now. Foreigners are also selling. And the more you lose on the rupee, the more a foreigner will want to sell even bonds, because you make wafer thin margins. If the rupee takes it away, then foreigners would only want to sell dollars more. So there's nothing going right, except that at 7.8, one would think all the bad news is in the price. I mean, it's an attractive level to buy, provided someone buys.
Okay, MPC Minutes hawkish. Thank you, Lata, for that. Let's address individual stocks in our movers and shakers segment. Fortis has been in the eye of many suitors now. A fifth one has entered the race. Nisha, lots of developments there.
Oh yes, it's the day after the storm, it seems, for the Fortis board, and under fire from the large investors. Well, Fortis board had to come up with a plan which looked much more transparent. So they have really constituted an independent advisory committee, which is led by Deepak Kapoor. Renuka Ramnath is also on the board, and they will be really evaluating the binding bids and giving their advice to the board. On 26th of April is when Fortis board will really take the final decision on the bids that at hand right now. So the two binding bids that they have is TPG Manipal as well as Munjal and Burman. But remember, after the board meet got over, KKR-backed Radiant has also put its hat in the ring and has offered to pay higher than any other bidder. And they are also looking at a quick due diligence so that they can quickly put in a binding offer. Remember, 165 rupees per share is the implied valuation for Fortis Healthcare's per stock. 10,000 crore rupees all cash deal for the hospital business is what they offer. But remember, after all this, the Fortis shareholders are the ones who have to really approve this deal, which could be very, very crucial.
Okay, Nisha, thanks so much for that. Well, aluminium stocks, in the last couple of days, they had a very, very good run. In today's trading session, we are seeing selling on Nalco, Hindalco, as well as Vedanta. The key reason, though, is that, in fact, overnight, there is some speculation that there can be a possible nationalization of RUSIL. LME prices, by the way, just from the recent peak of around $2,700 per ton, they have now moved to sub $2,450 per ton. So it's a good 10% correction. The key reason, as I said, was speculation that there can be nationalization of RUSIL. Remember, RUSIL's owners, that is Oleg Deripaska, they, in fact, there were sanctions that were imposed on him and various other billionaires. Now talk is that, in fact, maybe nationalization of RUSIL could be one of the possible outcomes. And there's talk that, in fact, of a state-backed rescue act. Now, if this happens, then, in fact, RUSIL could start selling some kind of production in the open markets. But remember, RUSIL is rather important. The total production in 2017 was 3.5 million tons of aluminium. Given that the aluminium market is around 60 to around 65 million tons, you're talking about nearly around 5 to around 6% of the total global markets. And ex-China, then in fact, it constitutes nearly around 13% or around 14% odd. So we'll have to keep an eye out, even if there is a prospective deal that can happen and that can be nationalization of RUSIL, then in fact, we'll have to see whether or not they can sell 3.5 million tons, because as it is, the aluminium market was in a bit of a deficit. Now the talk is that, in fact, the deficit could widen. So we'll have to keep an eye out on that piece of news very, very closely. However, we spoke to the management of Nalco, and they sound extremely positive on the outlook of both alumina as well as aluminium going ahead. Let's listen in.
Aluminium prices in past, it has gone 3,000 and above during the head edge of metal market, and now market is completely driven by shortage, because with sanction against Russia and some of the aluminium plants not producing to their capacity, now the market has gone into quite shortage. So we hope that prices will still continue. We are expecting that somewhere between 2,900 to 3,000 the prices will be there. For every $20 increase over the last year's realization in alumina, we get an additional EBITDA of 170 crores. And for every $40 increase in aluminium over the last year's realization, we get an additional EBITDA of 120 crores. So with this level of price, if we take $600 as the average price, which will be remaining for some time, and aluminium price, I am taking around 2,550. So there will be a doubling of the EBITDA, and it will have a strong impact, because EBITDA will move somewhere to 40%.
Okay, that's going to be a story to track. As Nigel was saying, 1.2 million people?
1.2 lakh people are employed by RUSL. So, you know, the government out there will want to do its best to make sure that it restarts operation.
Exactly. And restart operations.
Exactly.
Which means that much more supply back into the market.
Exactly. We'll have to keep an eye out, Rima, on this very, very closely, because even if something is worked out, then we'll have to see whether or not, you know, European players, the US, whether they buy the aluminium from there as well, because they can say, well, you're doing this only to circumvent this. So we'll have to keep an eye out on this development. We'll keep getting updates, I'm sure, by this evening, by Monday, we'll keep getting. So that's what's really going to move the aluminium prices.
Okay, eye on the Kremlin as well, and whether they will come in and support RUSL. Anisha, over to you on Reliance Power.
Well, yes, Rima, the power stocks were actually expected to do better given the comments coming in from the Power Minister talking about the impracticality of the latest banking norms. But Reliance Power is down and about on trade given its own performance in the quarter four was not really enthusing. Now, I won't talk about the numbers too much because it is overshadowed by a lot of one-offs. But talking about what brokerages are saying, Nomura, for example, says that the normalized EBITDA is below their expectations and they expect that the earnings in the near term will continue to remain tepid. Now, the other growth driver that they're seeing for the company is the Bangladesh project, but that is not expected to kick in before FY21. Hence, they have a neutral stance on the stock with the target price, which is very close to the current market price of the company. Now, just quickly running through your numbers, the revenue is down about 1.5%. The profit looks optically higher by around 16%, partly supported by the lower finance income. The PLFs also look better because remember, Sasan has done good with a 92% PLF, but overall it's the fixed cost under recoveries at Butibori that has caused the weak performance on the bottom line. Back to you.
Okay, all right. Thanks so much for that, Anisha. Well, NMDC has cut prices on both lumps as well as fines by around 100 rupees per ton. Earlier today, we spoke with Mr. Rao, the Director Commercial at NMDC, on the business outlook for the company. Let's listen in to what he had to tell us.
We have already achieved 36 million tons in the year which has just gone by. And this year, we are forecasting around 10% increase in volumes, which will be around 39 to 40 million tons. We will surely achieve that target. Our pricing varies from clusters to clusters in the sense that if you compare on East Coast our prices are lower by 21% compared to imports. And when we go to the West Coast, our prices are lower by 4% compared to the imports.
Okay, then here's a quick recap of all the buzzing stocks that we just covered. We have Fortis, Nalco, Hindalco, Vedanta, Reliance Power, as well as NMDC.
In today's trade, it's a gain of about 6%. It's lifted the spirits of the other IT majors as well. So Infosys, HCL Technology, all trading with gains of close to about 2 to 3%. TCS ticked the boxes in all parameters. Q4 growth was good. The commentary was optimistic for FY19, including the BFSI sector, which up until now, for the last 18 months at least, the company was sounding cautious. Their digital portfolio is gaining scale. It's got $4 billion in terms of annual revenues. So in all parameters, it looked good. And plus, there was that 1:1 bonus as well. In fact, now, as Nigel and I were discussing, TCS is just about 2% away from becoming India's first $100 billion market capitalization company. Earlier today, I got chatting with the management to find out what the growth outlook is for the company, their outlook on individual sectors like BFSI and retail. Listen in.
Realistically speaking, we are happy that we are on a double-digit trajectory. So we have broken into double-digit on a dollar terms. On the constant currency, it is still work in progress. Our focus, our determination, everything is to try and get to the double-digit mark on all parameters, whether it's constant currency or dollar denominated. But we'd rather wait for the next few quarters before we actually commit to that number. But we think that there is an opportunity out there, and we are very, very focused on maximizing on that opportunity.
So see, not in FY19, but FY20, do you think it's quite likely? You're talking about it being work in progress. So 1 year hence?
That's the plan, but as I said, we'll call it when we see it.
Okay, so the plan is that double-digit growth likely by FY20 onwards, 1 year hence. The commentaries turn a lot more bullish on BFS. In the press conference, you indicated that perhaps it's bottomed out. What is the evidence on the ground that it's improved for TCS, and this increase in spend perhaps is not directed to the captives or the in-house centers of large banks?
So I think there are 2 or 3 evidences. First is contrary to the co-located agile that they were practicing. Increasingly, they were moving towards a more location-independent, distributed agile methods, right? Which should give a chance for us to play in a much bigger way. That's the first point. The second point is that we are seeing enormous amount of demand, in areas like security, in areas like digital, in areas like blockchain, and so on, right? So coupled with these two things, I think, we believe that we have bottomed out. And the third is that we have also talked to our clients, right? I think, beginning of the year, so we went and talked to them. We believe that their budgets are holding good in the IT side of it. In the operation side of it, they are increasingly adopting automation, and they may be, they are expecting about 10 to 15% productivity over there in the operation side. So we believe that there is a reasonable amount of opportunities for us to play, and that's what gives us the confidence.
So just to add to that point, in your conversation with clients, how soon can the client budgets close? Can it happen in Q1 and growth perhaps reflect in the Q1 of FY19 for TCS? And how much would the spending be more compared to, say, last year? You're talking about 15% of productivity gains. Can the entire amount be plowed back into increased IT spends by these clients?
Well, I think so, because, just like our financial year, their financial year is from January to December. So we see some of those budgets already started to kick in, from at least from a banking financial services perspective. But, the cautious side of it is that, look, we'll wait for one more quarter and confirm that the banking financial services is really, on the upward tick for us.
But can it grow in Q1, close to company average?
I think we have the opportunities, and I believe so.
Okay. So Rajesh, X of BFSI, are you confident the other verticals can see a double-digit growth?
Fairly confident about that. So the other weak sector was retail.
Yeah.
In retail, we actually have the deal wins, and the pipeline is also very strong. So we see much more direct visibility in retail, and we are quite confident that retail should be able to deliver a double-digit in the year. And that's where the other underlying confidence is also coming. So we are now narrowed down to BFS. We see opportunity in the BFS side of it. We have restructured, we have got our teams set up properly for it. So we think we are, we see the opportunity, as I said again, and it should be possible.
So a double-digit growth in retail is purely on account of the recently won deals like Marks and Spencer's, or has there been a structural turnaround in retail, and from here on it can see a double-digit growth? Or do you just have visibility for 1 or 2 years because of the deal
both the deal wins that we have, as well as the pipeline that we see. And we have been talking about this for the last few quarters, that in retail we see a fair amount of turnaround coming, with the more traditional retailers actually putting up a very good fight against the so-called e-commerce pure play
online giants.
Online giants. So we are seeing, and this is really our sweet spot.
FY19, can the scale of your digital portfolio be enough for you to gain operational efficiencies, or does it need to gain more in scale?
At least we hope so.
Okay, so this size, you should be able to improve your margins.
I think it's $4 billion, and then in this quarter we have won about 250 plus digital wins, right? So all this gives us the confidence that, look, there is going to be scale in digital. That should play well for us in the margin side as well, right? Because these deals come up at a slightly improved margin. So overall, we believe that, we are in a good wicket, especially what digital is concerned. And year on year, we have grown 35% digital services. So I think we expect that to grow in a much more aggressive manner.
North America was soft only on account of BFS, or are there any other headwinds?
In this quarter specifically, it's because of BFSI as well as retail. And I think, that through the year, it has been like that, right?
And for FY19, when you give your outlook for North America?
I think with BFSI bottomed out, I think North America should be back on track.
No other headwinds for BFSI?
We don't see any other headwinds at all, Rima.